All right, good evening. Hope you guys are doing well. We're going to jump into it. This is an update for all my real estate investors. This is a little bit on the lending industry, right? So, as you can see, Wells Fargo is backing out of the mortgage market. What does that mean for home buyers, right? Let's go over the key takeaways and we'll talk about it. Wells Fargo, the country's third largest mortgage lender, is stepping back from the mortgage market. While not exiting entirely, they'll be focused on not only providing mortgages to their existing customers and those in minority communities. It's a major shakeup, which will see Wells Fargo take the lead from competitors like Bank of America and JP Morgan Chase, with a focus on investment banking and unsecured lending like credit cards. So what's the most risky thing out there? Unsecured lending like credit cards, because they've got nothing to secure but their credit lines. Anyhow, so Wells Fargo is stepping back from the mortgage industry. What does that mean for you and I as real estate investors? Well, it means there's one more leg out from the table, right? It means that the people that are buying our product, right, the flipped up, the rehab, the beautiful properties, their dream homes, have one less person to go to get a mortgage and the ability to buy it. And so this may just be the first start, right? Wells Fargo is, I think, the number one or number two. Wells Fargo, who's number one lender? JP Morgan Chase is the second largest mortgage lender in the country. Oh my gosh. Wow. I knew them in the top little bit type thing, but Wells Fargo is a huge lender. I mean, they're a huge bank. And so this is greatly going to affect the ability for people to buy our product. Remember, because it's not, everybody says supply and demand, and there's some truth to that, right? But it's not, there's more to it, right? So there's supply and then there's demand, right? Demand is not just whoever wants a house, it's whoever is qualified to get a house, right? How do we define qualified? Whoever is willing and able to purchase a house, right? Everybody and the mom wants a house, right? If houses were like Oprah, we'd all have, or we're on the Oprah Winfrey show, we would all have one, okay? But that's just not the world we live in. So they have to be willing and able to buy a house, right? They have to be wanting to take on that mortgage, that debt, saying, hey, this house price is worth it, let's do it, and able. This affects the ability of those to purchase homes, right? And don't think that this is going to be a small thing. I think this is just the beginning, right? I think as we go through 2023, again, we're in month 2.5, right? Valentine's Day was this week. Happy Valentine's, by the way. I think lenders are going to get stricter and stricter and stricter because they see an economic crash coming, and housing will be affected by that. Just wait till people start losing their jobs, and I think that's coming around the corner. A lot of people have estimated into this year, but this is just a big bird looking from a bird's eye view, giving us a clue to what will happen in the future, right? All right, second announcement. Let's see here. Fannie Mae change some guidelines up. So let's do that. So hit download announcement and then go to, let's see here. Not that one. Don't go to that one. Here we are. It'll be selling announcement, SEL 2003-01. Here's the big thing: cash out refinance eligibility. We've updated our eligibility policy for cash out refinance transactions to require that any existing first mortgage being paid off through the transaction be at least 12 months old as a measured from the note date of the existing loan to the note date of the new loan. Okay, that's a mouthful. Like, they need more like commas and periods in that. But what are they saying? So they'll do a cash out refi, right? But the current note, to the time it has been started, to the time that they're doing the refi, has to be at least 12 months old. This used to be 6 months. So how does that affect you and I as real estate investors, right? Well, it affects us because if we're flipping, okay, or we've got a good deal and we did like a BRRRR strategy or something like that, this extends the amount of time that we have to hold that other property before that they'll refi it, right? And Fannie, right? Yeah, Fannie and Freddie, they're the biggest lenders out there, man. Those two, I think they've got like 40 to 60% market share, something like that. I don't know, something around that. But they are like other lenders. You might say, oh man, I've got this other lender, she's great. Like, yeah, but she sells to Fannie and Freddie at the back end, right? You might not know that, but they affect the largest number of mortgages in the U.S. Okay, um, they are they're the I'm not coming with a good analogy, but anyhow, this is what happens when you're live. But so what it says is, if you buy a property and you want to flip it, right? And for some reason you get stuck with it, like it's not selling at, it's not selling. You did the rehab in 4 months, everything's good, it looks beautiful, but you're not getting the traction, and your hold costs are coming up, right? Because you have a hard money loan, which is great for short term, but not for long term. And you say, okay, I want to refi, cash out refi because I own it, right? I'll just pull it out and some equity, and then when I sell it, I'll just get all that back, right? Well, they're saying, hey, you got to hold it for 12 months. So if you're in month 4, month 6, you are halfway there, more or less, right? So you're gonna have to bear through those hold costs for another 6 more months. If you're doing the BRRRR strategy, which is buy, rehab, buy, rehab, refi, rent, repeat, right? I did this strategy before it was a thing. So basically you buy it with a hard money loan, again, like 10, 12, 15% interest rate or more with some points, which is fine because they'll give you the cash like that, as long as the equity is there and the deal is worth it, right? You do it, you do the rehab, you get a renter in, and typically you get a renter and a refi at the same time. You just get those things going as fast as you can, right? What they're saying is, if you're going to do a cash out refi, right? If you're going to refinance it and pull out cash, so let's say you bought, the house is worth 200,000 and you got a great deal. You got a loan for 100,000, or for 80,000 because that was the purchase price of it, and you had to put 40,000 for rehab, and so you're in for 120 total, and you're saying, hey, they'll refi it out up to 150, right? 75%. I will get an extra 30,000 in my pocket and have a loan on it. Well, they're saying, hey, you're gonna have to wait quite a bit of time. So you can refi it out right now for 120, but if you want to get that cash out, you're gonna have to wait for another 12 months. So what is, and it used to be 6. So what is this doing, right? Which 6 months worked really well, because by the time you got everything done, you'd have the refi in line, and just on that 6th month, just pull the trigger. So what is this doing, right? It's taking risk off the banks and putting it onto someone else, right? In this case, it's the homeowner, right? Or the flipper or someone else. Banks are starting to de-risk, right? We saw that with Wells Fargo. We see it now with Fannie Mae. They're putting more rules in to deny more things, or push things out, because a lot can happen in a year, right? This might change in the next 6 to 9 months. And they might say no cash outs, right? Or something else. But my point with this video is, lending is getting stricter. It's tightening up, right? And what controls housing purchases and thus housing sales, right? And thus housing prices? Lending does. So if lending is restricting up, is becoming restricted, housing prices are not on their way up. I'll say it again. If lending is becoming more restrictive, housing prices are not on their way up. My name is James. This is me and my take on this giant economy we live in. If you got any questions, or maybe looking for an alternative investment to real estate, one that I have fallen in love with and I sold 90% of my real estate for, give me a contact, give me a call. But I hope this video serves you well, and I'm out.